You checked Credit Karma this morning. Maybe it was the first thing. Maybe it was the reflexive phone grab between the alarm and the coffee, the same way you check the weather, or the news, or the number of notifications that accumulated while you slept. You opened the app, you looked at the number, and you made a decision about your financial life based on what it showed you. The number it showed you is not your credit score, not the one that matters. Not the one the mortgage lender pulls when you apply for the house. Not the one the car dealership runs when you sit down at the finance desk. Not the one that determines which interest rate tier you land in, and how many tens of thousands of dollars that tier will cost you over the next decade. Credit Karma shows you something called a Vantage score. The lending industry uses something called a FICO score. They are calculated differently, weighted differently, and can differ by 20 to 60 points in either direction, which means the number you have been monitoring, optimizing, and making financial decisions around may bear only a passing resemblance to the number that actually controls your cost of borrowing. And Credit Karma has been telling you it's your credit score for years. In the same app where they recommend credit cards and personal loans and earn a commission every time you apply for one. My name is Mia. I spent years inside financial services watching this specific confusion operate as one of the most profitable information gaps in the consumer finance industry. Today, I am showing you exactly what Credit Karma is, what it isn't, where the real number lives, how to get it for free, and what it's actually measuring that the Vantage score quietly misrepresents. 2 scores, 1 app, 1 revenue model. Let's start with what Credit Karma actually is, because understanding the product requires understanding who is paying for it. Credit Karma is a free service. It does not charge you to check your score. It does not charge you to monitor your credit. The entire platform is available at zero direct cost to you, which means you are not the customer. You are the audience. Credit Karma's revenue comes from financial product recommendations, credit cards, personal loans, auto refinancing, mortgage products. Every time you are shown a recommendation and you click through and apply, Credit Karma earns a referral fee from the lender. In 2022, Credit Karma reported revenues of approximately $1 billion from referral fees collected from lenders for sending them applicants. The score Credit Karma shows you, the Vantage score, is real. It is a legitimate credit scoring model developed by the 3 major credit bureaus as a competitor to FICO. It uses your actual credit data. It is not fabricated. But here is what it is not. It is not the score used in 90% of major lending decisions in America. That score is the FICO score, developed by the Fair Isaac Corporation, licensed separately to lenders, calculated using a different algorithm, different weightings, and different treatment of specific credit behaviors that produces materially different numbers. The Vantage score Credit Karma shows you is designed to be directionally useful. Good goes up, bad goes down. But it is not the number the lender sees when you apply for something real. And the gap between directionally useful and precisely accurate is exactly where $40,000 mortgage rate surprises live. Where the numbers diverge and why it matters, let me give you the specific scenarios where Vantage score and FICO produce meaningfully different numbers, because this is where the real cost of the confusion lands. Thin credit files. If you have fewer than 5 accounts or a credit history under 2 years, Vantage score is specifically designed to score you more generously than FICO. Vantage score was built partly to extend scores to people FICO would leave unscored, which means a thin file borrower might see a 710 on Credit Karma and a 650 on the FICO score. A mortgage lender actually pulls 60-point gap, different interest rate tier, thousands of dollars, recent negative events. FICO and Vantage score treat collections, late payments, and derogatory marks on different timelines and with different decay rates. A collection account that has aged 2 years may be weighted more lightly by Vantage score than by the specific FICO model version your mortgage lender uses. The Credit Karma number looks recovered. The lender number has not recovered at the same pace. You show up to the application believing you are prime. The lender system says near prime. The rate changes, credit utilization timing. Both models penalize high utilization, but the sensitivity differs. FICO 8, the most widely used mortgage scoring model, is more severely impacted by utilization above 30% than Vantage score 3.0. If you are carrying 40% utilization, your FICO score may be suppressed more than your Credit Karma score suggests. You have been optimizing for the wrong measurement. And here is the layer that almost nobody discusses. There is not one FICO score. There are dozens. FICO 8, FICO 9, FICO Auto Score 8, FICO Bank Card Score 8, FICO Score 2, FICO Score 4, FICO Score 5. Different lenders use different versions for different products. The mortgage industry primarily uses FICO Score 2, 4, and 5, models that are older and in some ways more conservative than FICO 8. Auto lenders often use FICO Auto Score. Credit card issuers typically use FICO 8 or FICO Bank Card Score. Credit Karma shows you one number. The lending industry runs you through multiple models depending on what you're applying for. The number that matters is the one specific to the product you are pursuing. And it is almost never the number. Credit Karma showed you this morning. How to get the real number for free. Here is what they do not tell you in the app. Your actual FICO score is available for free, legally permanently without a subscription, through multiple channels that the credit bureaus and major lenders are required to provide. Discover's Credit Scorecard provides your FICO Score 8 from Experian for free to everyone, including people who are not Discover customers. No card required. No trial. Free, updated monthly. Experian's own website provides your FICO Score 8 directly for free with account creation. No credit card required. Several major banks, Citibank, Bank of America, US Bank, provide free FICO Score access to their existing customers through their online banking portals. If you bank with any of them, the score is already available to you without opening a new account. For mortgage specifically, where the stakes are highest and the score version matters most, you are entitled to see the score the lender pulled within 30 days of a credit decision. If you have been recently denied or approved at a rate you did not expect, you can request the exact score and model version used in that decision. That is federal law under the Fair Credit Reporting Act. That right exists, whether or not Credit Karma told you it does. The FICO score from these free sources is the same score the lender sees. It is calculated on your actual credit file. It costs nothing, and it replaces the Vantage score approximation with the number that actually controls what you pay, what to do with the real number, once you have your actual FICO score. Not the Credit Karma approximation, the real one. 3 things change. First, your optimization target becomes accurate. If Credit Karma was showing you 715 and your real FICO is 670, you have been making decisions based on a position you do not actually hold. The gap tells you how far you actually are from the prime lending tier and gives you an honest baseline for the utilization reduction, limit increase, and goodwill adjustment actions that move the real number. Second, your application timing becomes strategic. Major financial applications, mortgage, auto loan, significant credit card, should happen only after you have pulled your actual FICO score from the relevant model version and confirmed you are in the tier you believe you are in. Applying blind to the real number and discovering the rate discrepancy at the closing table is one of the most expensive surprises in consumer finance. Third, you stop optimizing for Credit Karma's recommendations. The score they show you improves when you take actions that also happen to generate Credit Karma referral revenue, opening new accounts, applying for products they recommend. Some of those actions may genuinely help your credit. Some of them may temporarily suppress your real FICO score through hard inquiries and reduced average account age. The app does not distinguish between these outcomes because both outcomes produce the same referral fee. Know which score matters for what you are trying to accomplish. Build your strategy around that score. Stop letting a billion-dollar referral engine navigate you through one of the most consequential financial variables in your life. You were not wrong to use Credit Karma. You are using the tool available to you, a tool that was designed to be useful enough to keep you engaged and profitable enough to justify the engineering behind it. You are not behind. You've just been reading a map drawn by the people who want you lost. Hit subscribe, because next week I am going inside the mortgage application process, the pre-approval theater, the rate lock window, and the fees that materialize 3 days before closing, and showing you every extraction point they are counting on you not to see. And I'll leave you with this. You have been checking your score every week. You have been checking the wrong one. Pull the real number today, because the lender already knows it, and you should too.